So should we start? Because we have a very tight schedule today. As usual, the TCOPs are always very dense. You know, there are many functions, great participation, which is really great. But it also means tight time management, and unfortunately, it's a bit like our cash management these days. We don't have much buffers left. Actually, we don't have any buffers for this one, because at the end of that, the TCOP session, we need to reconnect with the BCOP for the plenary and for the wrap-up. And so we want to keep at least some time for discussion. So if I'd like to welcome all our participants, TCOP members and speakers. And this year's theme of the dual sustainability of capital expenditures matters a great deal, as we saw from yesterday's presentation on the value for money and climate risks and tagging. And Treasury certainly have a key role to play in achieving these cross-cutting objectives, as they're really at the center of the PFM-PIM cycle. Unfortunately, the COVID and the climate shocks have many similarities, and we can really draw on the lessons from COVID to inform our preparedness and resilience to the latter shock, which is coming. So today we'll be able to dig a bit deeper into how treasuries can prepare themselves to strengthen their systems, their resilience, in terms of cash management, commitment controls, which will be covered in session 1, but also through climate risk assessment and financing, which will be covered in session 2. We have a large and great panel of speakers, whom I want to thank in advance, and also ask them for their cooperation to not only not exceed their time, but if they could actually give me back some time so that I can build a buffer. So if I can borrow a minute or two from each speaker, that would be great, because yesterday we really ran over, and we don't have this luxury today, unfortunately. So I have prepared some reminders, but I give the speakers a 5-minute reminder. I don't know if you can see that, homemade, and a 2-minute reminder to wrap up. I'm particularly pleased to have 6 PEMNA member countries sharing today, because that is really the primary objective of this network, and because nothing really replaces practical experience. I would like to invite the countries that are not presenting today to participate actively in the Q&A session. And you can actually post your questions in the chat, so that right after each session, we can go to the questions and answer them. So without further ado, let me jump into session 1, which will be on cash management. It is not new. We have talked a lot about cash management, and understandably, because that's really one of the primary functions of treasuries. I mean, that's even where the name comes from, Trésor, no? where all the cash and money was held. But today we look at it in a very different context, in the context of crisis. How to forecast cash under uncertainty, which is bound to increase, unfortunately. And for this, we have 3 distinguished speakers who will give us 3 different and complementary perspectives on the matter. The first speaker, Mr. Mike Williams, is really a guru on cash management, and I'm really pleased that he has accepted our invitation at an impossible time, because he's presenting from the UK in the middle of the night, which really shows his commitment to the topic and to the community. Thank you very much. He'll be presenting on the fundamentals of cash management, how it is impacted by uncertainty, and ways to adapt the forecasting. His presentation is also informed by a recent PEMPA study we have shared with you. Then we'll have Ms. Richard Swan, Deputy DG of the Treasury of Cambodia, will present how they estimate cash requirements, how they ensure a basic buffer, and his experience of cash prioritization during this crisis. IFMIS and procurement systems should help with cash forecasting and management. And then we'll have a presentation by Ms. Sarima Binti Hussain, Director Central Operation, the Malaysian Accountant General Department, who presents how Malaysia has adapted to this increased uncertainty by leveraging its TSA, but also its IFMIS, increasing flexibility both on the revenue side as well as on the expenditure side, and realign commitments accordingly. And this will be a good segue in our next session on commitment controls. But without further ado, let me invite Mike to present. Thank you.
Well, thank you very much, and good morning, everyone. And I'm very pleased to be able to be with you. As mentioned, I've done a lot of work with PEMPAL, your sister organization. I'm going to be quite quick through my slides. As we know, we haven't got much time. There's quite a lot of detail in the slides. And I won't go through all that detail, but of course there'll be an opportunity for questions, I hope, and through the chat function. So very quickly to move on, just a few words about the cash management context. There are, of course, three pillars of modern cash management. If we start from the Treasury single account, that's the first pillar, getting your arms around government cash. That's fed by tax, drained by expenditure, fed by issuance, drained by redemptions. And of course, expenditure links to budget execution. The cash balance, we have to have a sense of the balance we need, our buffer or our target cash balance. And both budget execution and the targeting of cash balance needs a cash flow forecasting function. And that's the second pillar. And then the third pillar is the short-term borrowing and lending in the money market to smooth your cash balance, ensure the availability of cash. And that, of course, links then also to debt management. I'm not going to say anything about the TSA today. I'm going to focus a little bit on forecasting and active cash management. Forecasting, I think the main principles of cash flow forecasting are now well established. Forecasters have to focus on what will happen, not what should happen. The forecasts are different from the budget plans or the cash plan. They need to look some period ahead, at least 3 months, and that supports responses to the forecast in a planned way rather than a purely reactive way. It means building an intelligent network, pulling in information from ministries, department agencies, the revenue authorities. Also, of course, I know you've been talking about capital expenditure, also project management offices or ministries of planning. And the focus is on the bottom line, the cash balance in the TSA and the policy responses needed, usually about varying issuance to ensure cash availability. And at the bottom of the slide, you see a flow chart, the preparation of the forecast, which feeds into a decision-making process, probably with some form of cash coordination committee, and then to the responses to target your cash buffer. And when we look at what the impact of uncertainty is, and I'm starting here from exactly the same flow chart, I think there are three things worth emphasizing. Of course, one of the impacts, and we've seen it through COVID, changes of the budget, shortfalls of revenue, new programs. A number of countries have set up separate funds with separate accounts, possibly earmarked. Also, and I've mentioned Kazakhstan there, they have instituted a completely new procurement process, which has speeded up all the timelines, which of course impacts on the forecast. Past patterns have broken down. That's problems for the forecast, problems for the macroeconomy as well, of course. But it means that we have to, we can't always rely on what has happened in the past. Capital expenditure has often been used as an expenditure regulator, often, of course, with longer term damage to the infrastructure and suppliers. And we've also seen, as we've seen in the last year and a half, contingent liabilities crystallizing, bailouts given to state-owned enterprises. And then thirdly, all our financing structures have changed. The debt strategy has had to be put on ice. We've had to look for new sources of cash. Some countries have been helped by external assistance. Others, like a couple of PEMPL countries I've mentioned, have actually had to set up effectively separate buffers for foreign currency because where the markets have been closed to them. Plenty of changes there. What does it mean for the forecasters? Both, and their implications both for inputs, the sources of new information, and outputs, what decision makers now need. On the inputs, of course, it means building on the intelligence networks that already should be in place. The macro fiscal unit, the budget department, ministries, the revenue authority, the project offices, and of course, donors and development partners. Those who are monitoring the TSA have had to do new work identifying new accounts, but also new sources of cash. And some countries have managed to widen the scope of the TSA to bring in extra budgetary funds, for example. And then cash and debt managers are changing their plans. And of course, in many countries, and I've seen this certainly among the PEMPL countries I've worked with, but we've also seen it widely in the EU, in Latin America, in South Africa, have also used those cash risk SOEs as a source of additional financing by borrowing short-term from them during the crisis. The other message, and I'm sure many people have said this, is the importance of institutional networking. Of course, debt and cash managers have always needed to work very closely together, but that network is now widening. The central bank has been very important, not only in buying debt directly, but in providing liquidity to the banking sector, which has helped increase the demand for debt. And one of the strong messages of the last 18 months is the critical importance of communication between debt managers, cash managers, monetary, fiscal, and regulatory authorities. But of course, the pandemic's also drawn attention to some forecast deficiencies. I mean, these challenges, which are based on my work in the past, have always been there. Insufficient understanding of cash forecasts as well as cash plans. Too much top-down forecasting with inherent biases. Cash debt communication poor and unstructured. And extra budgetary funds can have major implications for flows across the TSA. And I've seen that in recent work in Mexico, Turkey, Moldova. So what are the solutions? Again, some of these are not new, but they have been highlighted by the pandemic. Budget credibility is essential, but the forecasters must break any link with an approved budget, focusing on what will happen. Ensuring more systematic coordination structures. Many ad hoc structures have been put in place, and it's good that ministers have often taken much more interest in the forecast than they have in the past, but those structures should be formalized for the future, including ministries, EBFs within the processes. And looking at the scope for exploring the scope for linking days of outflows to days of inflows. Don't arrange a debt redemption for the week that you're also paying salaries. I mean, Japan is the exemplar who greatly smooths its cash through this above the line matching without necessarily having to vary the short-term issuance to smooth their cash flow. So what's it mean for the use of the forecast? And of course, the prime use of the forecast is supporting cash management, ensuring cash availability, smoothing the TSA, short-term borrowing investment that are targeted in such a way as to reduce the volatility of the cash flow across the TSA, with benefits, of course, to government because it allows a lower average cash balance with savings of cash, but also benefits to the central bank because that takes some of the pressure off monetary policy. And it is important that the cash flow forecasts are always passed to the central bank. Of course, COVID has required shorter reaction times, and we've seen shorter tenors, both on the borrowing and indeed the lending side, with more frequent updates of the forecast. And that has been apparent across the world. Supporting budget execution, looking to identify the cash profile some months ahead, which may be very different, of course, from any budget profile, but the further we can look ahead, the less disruptive to the budget will any changes be, whether it's in the form of cash rationing, delaying payments, or whether it's delaying allocations or release of allocations or release of appropriations, or even adjusting the budget. But of course, those decisions should not be for the forecasters or cash managers. Those decisions should primarily be taken in a separate forum. And when we're faced with deviations from forecast, the forecasters should be the people who are giving advice to the cash coordinating committee or to ministers or other decision makers on the action needed to ensure cash adequacy over the period ahead or cost-effective use of your surplus. And the first question, of course, is a deviation from the forecast going to be sustained, or is it just a matter of a timing change? If it's sustained and there's less cash, we have to think about changing issuance, perhaps selling assets, and in extreme, although we hope we avoid it, cash rationing. If there's a timing change, of course, varying Treasury bill issuance is the main tool, but for very short-term changes, we can draw on the cash buffer. And one of the questions we've had to ask during COVID is whether the cash buffer is sufficient to cope with the extra volatility, uncertainty, market disruption. Are our safety nets, our very short-term safety nets in place? Credit lines with commercial banks, borrowing from those SOEs that have cash, central banks in an emergency. And I think one of the general messages of the last 18 months is the need to review the cash buffer and safety nets. And some of the PEMPAL countries have increased their buffer during COVID where they've got the capability of doing so. But all agree that it is something to be reviewed when we return to something that's more recognizable as a normality. A couple of points on forecast presentation. Of course, in these circumstances of more focus on the short term, greater granularity is needed in the forecast. More detail is needed of the crisis-related programs. Monthly forecasts should be replaced by weekly with daily. But it is important also to remember the profile within the month or within the week. And there are a couple of examples on the right-hand side. Italy at the bottom, the top one is taken from an Eastern European country, where you can see that there are big outflows within the month before there is an inflow. So yes, looking at end month numbers can give you a false picture of what is actually likely to happen to your cash if there is a big outflow. As I say, there has to be a greater focus on the short term, usually in support of budget execution, but try and keep the longer term framework in place, because the longer distance you can look ahead, or the longer time you can look ahead, the more opportunity there will be to plan effectively. And the other thing that mentioned at the bottom of the slide there is scenarios, sensitivities, what ifs. And that's one of the other main messages that I want to stress. And if we think about a typical forecast presentation, and this is the first of 2 slides, this is looking 3 months ahead on a weekly basis, and there's a bottom line at the bottom of the page there, looking at the implied closing balance of the Treasury single account. But then things go wrong. So it's important for the forecasters to give some indication of the impact of possible contingencies, whether it's a revenue shortfall, delays in grants received, a failed auction. You will have your own thoughts about that. And then also how there may be a response in terms of the policy options, whether it's on the issuance side, the asset side, and whether it means just varying Treasury bills, or whether the bond program has to be changed, or in extremis, cash rationing. And I do want to stress the importance of thinking about scenarios, and Turkey is one country that's put a lot of effort into this in recent months. So I'm going to stop there. Apologize for going through so quickly, but I think we had to, given the pressures on the session, and I look forward to future questions and discussion. So thank you very much.
Thank you very much, Mike, for this excellent presentation and very timely delivery. Indeed, we're rationing everything these days, cash time, but we can certainly come back to that through questions, and then also if there's offline, obviously. But without further ado, let me move to Cambodia and invite Mr. Vichit-Suan to present his experience of managing cash during this time. So do you want to, good morning, do you want to project your own screen? Okay, fantastic. Great. And so I'll also ask you for a time credit of 1 minute. Thank you. Please go ahead.
Okay.
Maybe if you can display it, sorry, if you can maybe display it in full slide view, that would be useful then.
Is it already displayed full slide?
No, but we see the next slide, so if you can just focus on this slide. I think if you click on slideshow, then I guess. Yes, perfect. Oh, slideshow.
It's okay right now? Okay.
It's better, but slideshow, if you do on slideshow, maybe then you have
Slideshow.
the full screen.
I wonder if the problem is you're using 2 screens, and
yeah,
you're picking up the wrong screen.
Or maybe that's.
If you go into display settings, I think you can swap which screen you're showing. It's a problem I have regularly.
Oh.
Still coming.
Great. Yeah, at the top there's display settings.
Setting.
At the top.
Yeah.
Next to taskbar. Or else let's go ahead with this one. If everyone can view. If you go towards the left, a bit more towards the left, on the top, display settings. Yes.
This one?
No, next to it, not this one, next to it, display settings. Yes, yes.
Display setting. Swipe.
Yeah, try this.
Cannot.
Okay, so let's just move ahead with this one.
Yeah, let's go through.
That's okay.
Okay, thank
Everyone
you.
has the slides anyway. Thank you.
Yeah. Thank you very much, Mr. Fabian, and a very good morning, good afternoon, and good night to ladies and gentlemen. First, I would like to say apologize from my Deputy Director General, Mr. Richard Sun, as he has a very unforeseen personal affair. So I in charge to present his presentations. My name Chia Suchit. I'm Deputy Director of Accounting Service and within the General Department of National Treasuries. So my presentation will focus on 3 points. So let's say the first point will deal with the question that we could say what we have been done so far on the cash requirements. And the second one is how we try to determine the level of cash buffer. And the third one, how do we deal with the cash management under the pandemic situations? So what we have been done so far regarding to the cash requirements, we use the method of historical trends. So we develop a seasonal just cash flow forecast from the annual budget allocation based on 3 years of monthly historical pattern. And then we try to analyze the errors in the previous forecast by comparison with revenue and expenditures outcome. And we observe that there are some reason of our cash flow deviations. Those reasons that we could highlight here in 4 bullets. First is the information was wrong. It means that the spending unit send sometimes wrong data or error data that they key in the system and send to us. And some information are not updated, and they still keep their regular data. We observe as well that the expenditure pattern were unusual. It means that the demand of expense is sometimes high, sometimes low, and we sometimes lack of cooperation between different stakeholders. And there exists sometimes contingency expenditure as well. The unforeseen expenditure come to the time. So the coordination information requirement with the spending unit and the revenue agency is very important, as Mr. Mike highlight a moment. We use the budget plans for our cash forecasting, and this budget plan is consolidated by the General Department of Budget in every quarter and break down into monthly. And this budget plan initiated by spending units based on their annual budget law. Another important document which is used for cash planning is Procurement Plans, which is approved and consolidated by General Department of Public Procurement. However, spending unit initially submit the plan during the budget negotiation process. And this is the new process where we have determined in earlier time where before we do not have procurement plan in the early of the starting budget execution year. So this is a good progress where the spending unit can do it. Another important document that we didn't write down in the slide here, but I think it's very useful, and we have been working together with the General Department of Debt Management, especially about the reimbursement plan and another thing that we have done in the situation of COVID-19 is that our general department, especially our top management, my DG or my Deputy Director General, was or are in the member of the COVID-19 committee to manage the situation. So they are aware of a lot of information, and they bring those information to discuss internally within the management and put it into the cash plan or cash requirement determination. Currently, we try to develop, we have developed a cash management manual with the support from Mr. Suhas Susi. And based on the manual, we have developed an IT system. It's called online web-based application, where allow the spending unit to key in their cash planning so that we can consolidate all cash requirement and cash inflow from relevant entities. We face some challenge because it is a new thing for the line ministry. They use this system, and some information, as we said earlier, are not really up to date for their budget executions. In the future, we hope that the FMRS will be another tool that can improve our cash management. So we are planning to interface the online web-based application with FMRS to track all the cash inflow and outflow. We also be able to use the procurement module, which currently is piloting and fully used in 2022 to have our cash planning. So how to determine the cash buffer? So we analyze the TSA cash balance and the variance. We try to find the standard deviations in the daily basis and weekly basis. We find the daily and weekly outflow over the 24 months, find the reason, and find the solution, the recommendation or action plan for better cash plan, and establish a lower and upper limit. We determine the target TSA balance and need to be ensured that the balance in the TSA does not fall below the minimum. For the pandemic situation and how we manage our cash. So what did we do exactly for the cash planning in such situations? First, I will highlight some government policy response to the COVID-19. And after that, the last slide will focus on the cash management. So how our cash plan is affected by the pandemic? Of course, the COVID-19 will shift our expenditure structure from one item to another items. Especially, we are focusing on health sector and dealing with the pandemic. So once the budgetary structure change, it will impact to our cash plan. So the government have issued some guidelines or instructions where we have highlighted here some policies like to reallocate our budget and optimize the unnecessary expense by cancelling or suspend during the COVID-19. We allow the Treasury to use the government saving or reserve. We do have it since many years ago. As in Cambodia, we have a good economic growth. So we have saved the cash into the saving or reserve. We try to maintain the salary basis by not recruiting more 7-7 for 2020 until 2022. We restrict the recruitment of new 7-7, etc. So in terms of the cash management, we adjust the expenditure and revenue forecasting. So we work closely with line ministry and revenue agency to track cash flow information. We update it daily. We monitor it daily and get the decision from the head of the ministry, especially. And as Mr. Williams said, a close relationship between DG Treasury and the minister is very, very important for the cash management. So we are in the committee. We go directly discuss with the minister, and we get the information, and we know what should be done in the future, in the coming weeks or coming month. We use the reserve. We take action immediately with our Deputy Prime Minister, Minister of Economy and Finance. And for the next year, we are preparing for issuing government bonds in 2022. So in the case of cash shortage, we try, as we highlight here, we try to use our cash saving, cash reserve. We go to the financial market for the next year. And, you know, in Cambodia, we have some kind of mindset of charity. This is also some kind of important point that I should highlight here. Charity from the rich people. So in case of we need cash, maybe we can raise fund from the charity from rich people. This is also something that I would like to highlight. And the ending solution is maybe we can go to the NBC to get the advance from the central banks. But this is not the immediate action, but maybe the ultimate action if we really lack of cash to target our cash TSA, our TSA. So in conclusion, I just want to say one word is if you have a regular control on the information between stakeholders and you have a good coordination, you will have a good flexibility in the cash management. And at that time, you can resolve your cash within the uncertainty situation. Thank you very much for your listening. Thank you.
No, thank you very much, Mr. Sochet, for this excellent presentation. And so I know 3 points: information, coordination, and empathy, which is a good point you mentioned. The problem is that many spending units may see the Ministry of Finance as a rich person, no? So how to manage these expectations. But we'll turn to Malaysia and trying to see how she called on the rich SOEs, treasuries as well, to help smooth the flow. May I also invite you all to put your questions in the chat box and maybe also start answering the chat and the questions. So Mike, I posted one question for you, for instance, because this way we can have a more interactive exchange and overcome the time constraint for the Q&A. So please put your questions and answers already in the chat box. Without further ado, let me call on Mrs. Sarima Binti Hussain to share Malaysia's experience. Thank you very much. Can you share your screen, or do you need help with that?
Okay, 1 minute, please.
Hi, Fabian. So The Secretary will be sharing the screen on behalf of Malaysia.
Perfect, thank you.
I shared already. Is it okay?
Perfect. You can
Is it
start.
okay?
Thank you.
All right. I need to put it in the slideshow mode, isn't it?
No, it's okay. We can see it. You can start.
Okay.
Thank you.
Tapi I tak nampak dia orang. Good morning. Good morning, ladies and gentlemen. Thank you, Fabian, for giving this opportunity for us to share our experience on this topic. To begin the presentation, I would like to share a brief background on Malaysia experience with this COVID-19 pandemic. Malaysia is no different from other countries where we have been hit by a 3 waves of COVID-19. And the first case of COVID-19 in Malaysia was reported on the 23rd January 2020. And that is when the first wave hit Malaysia until 16 February 2020. That was followed with the second wave almost immediately after the first wave ended, which started on the 27th February until 30th June 2020. And the third wave is still happening now, started on 8 September 2020. And the third wave is due to Delta variant. And due to the pandemic, Malaysia did our lockdown from time to time. This full movement control order or MCO was enforced throughout the country, starting from 18 March 2020 to 30th April 2020. The second MCO was enforced starting from 13 January 2021 to 18 February 2021. But in some states, the MCO was continued beyond 18 February. And the third MCO is still happening now, started on 25th May 2021. And
sorry, Puan. I think the slide is not moving.
oh, okay, sorry. During this pandemic, it demands the COVID-19 pandemic is straining not only the healthcare system, but also the economy of the country. Similar to most economies across the world, Malaysia was impacted by the triple shock of COVID-19. Firstly, the direct health impact of the virus, the economic impact of the movement restriction order, and the global recession. Because of this pandemic and due to the uncertainties, government need to make fast and tough decisions in handling the cash flow. The main key for the country to come out from this pandemic is through vaccination, and that is why Malaysia government decided to implement our national COVID-19 immunization program, also known as a PIC, which is our national vaccination campaign. And this pandemic affect Malaysia in terms of number one, revenue. Our revenue is affected, and tax collection has dropped, and it doesn't meet our revenue target. And due to MCO and exemption was given, and deferment of monthly submission was given to selected industry, that is why the revenue is affected. However, immediate action has been taken to flatten the revenue fluctuation in 2020 as well as this year. And among the action taken is to look for other alternative source of revenue rather than depending solely on tax. The second thing that pandemic affect Malaysia is in terms of fiscal stimulus injection, where we implemented the fiscal stimulus injection to provide financial relief to Malaysian citizens which were affected by the pandemic. and this is in line with government aim, which is to spur the economy and to ensure business continuity through fiscal stimulus package. And since 2020, last year, Malaysia has been announcing multiple stimulus package in response to COVID-19's impact towards economy. This includes direct cash transfer, wage subsidies, and various other assistance, such as special allowance to our frontliners in handling the COVID-19. This expenditure need to be continued in order to ensure the recovery plan can be achieved. And thirdly, government expenditure has become volatile, and in order to manage the uncertainties, government and control need to be put in place. And so what do we do? Several measures has been taken to address the impact of this uncertainty caused by this pandemic. First is on the cash flow committee meeting. The monthly cash flow meeting, the normally monthly cash flow meeting is now becoming a weekly cash flow meeting. It is more frequent, and this is the highest authority to discuss the financial and cash position of the government. The members of the cash flow committee meeting, Ministry of Finance, with representative from Finance Division, Fiscal, Budget, and Tax Division. Other members are from Central Bank of Malaysia, Inland Revenue Board, Royal Malaysian Custom, and our office, Accountant General Office, acting as the secretariat for the meeting. The committee focus on cash and forecast position for the week. We discuss on the immediate action to be taken, or what are the important solutions that need to be taken in order to avoid insufficient funds, especially when large outflows are required. While the governance at the higher level is being strengthened, which is the cash flow committee meeting, communication and coordination between desk officers are reinforced to ensure smooth process of day-to-day operation. These desk officers are from Accountant General Office and other division, especially from Ministry of Finance, including Fiscal and Budget division. Okay, the next one is on the flexibility of cash. And under this uncertainty situation, we also need to make sure that cash is being managed properly, especially on its flexibility. Malaysia is implementing a hybrid TSA, where we keep some ideal balances in our accounting office bank account. Our main TSA is in our Central Bank of Malaysia. In the present situation, the ideal balances at the AOS bank account is being reduced to the minimal amount, and the cash, more cash is being concentrated at the TSA head office level in our central bank. And under this pressured situation, where revenue fall and expenditure is to be increased, we did negotiate with a commercial bank in order to get better returns from the bank balances. And we managed to get a slightly better rate than the OPR, and the rate is as good as 1 month FD placement. Currently, we managed to get this facility from 3 commercial banks, and with this arrangement, it does allow us to increase buffer without having opportunity loss. Okay, on this preserving cash, also under this uncertainty period, we have to, it is not avoidable to we have to hold extra cash. This is to make sure we can make payment, we can honor payment without delay. Our normal target balance, which is usually around RM 8 billion, which is roughly about USD 1.9 billion, need to be increased. And to manage this, the portfolio for investment in FD has been changed to allow for more liquidity position. Long-term investment has been reduced by around 35%, while short-term investment has been increased around 5 to 10%. Okay, another on this flexibility of cash also. On this expenditure, Malaysia continue to focus on pandemic-related expenditure, such as providing cash assistance to household and individual. The assistance covers all walks of life, including senior citizen, individual, and household from different income bracket, including B40 and M40. When we talk about B40, it represents a household income group below RM 4,850. Meanwhile, M40 represents household income group between RM 4,850 to 10,960. Among the initiatives announced and given Bantuan Prihatin Nasional or National Care Assistance, which subsidy program, Prihatin package for business, especially small medium enterprises, and many more. We also, Government of Malaysia also implement expenditure rationalization, such as a reallocation of fund, expenditure by priority, and we also do postponement of non-essential physical project. With this rationalization, it does help government to manage cash efficiently. And on cash assistance, when we decided to speed up the national COVID-19 immunization program, which was aimed to be completed by end of this year instead of the earlier February 2022, we decided to use our National Trust Fund, commonly known as KWAN, for these special purposes, only to procure vaccine. By using these internal resources rather than relying on a financing program to fund the vaccination expenditure, it does allow us to spare some fiscal space in yearly budgetary. And since KWAN, our National Trust Fund just now, is managed by our Central Bank of Malaysia, who is focused on investment portfolio, arrangement to liquidate the investment to fund the vaccination program require proper forecasting, and the arrangement depending closely on availability of vaccine supply. So when we need to procure, then only we tell our central bank when we need the cash.
Sorry, 1 minute left, please.
Okay. And also on this revenue collection, due to the uncertainty in revenue collection, we also plan to get our dividend from our government linked companies timely according to our requirement. A significant amount of dividend from our GLC is from Petronas, and we did discussion with them for the time when we need the cash. This is important because it does because we want to avoid we cannot pay any big payment when it is required. Okay, the next slide. And the key success factors for us in managing the cash under this uncertainty period is one is the robust debt and cash management coordination, effective cooperation between cash managers, revenue collecting agencies, and budget office. And we have a very good system. Our our IGF mass, which is a very good system for us to have integrated data, mainly on the commitment when we need to pay. So with that, in the system, we at the HQ were able to see what are the payment need to be made. And last but not least, we have a good TSA structure already in place. Okay, with that, I end my presentation. Thank you.
Well, thank you very much for this excellent presentation. And if you don't mind, since we're constrained in time, we'll maybe use the chat box also to ask you more questions on this excellent experience. Thank you very much. And it's a very good segue to the next session on commitment controls, because indeed, as you say, a key variable is really knowing what commitments we have, what commitments are coming, and also how to realign the commitments. And I'll have some questions for you on that in the chat box. But without further ado, let me invite the next speakers. So my colleague Suhas Joshi, whom many of you know, and he's really a pillar of this TCOP. And so he has kindly agreed to give us some time buffer and to answer more questions in the chat box. So he'll give us a quick presentation on good cash management practices, fundamentals of commitment controls, how the crisis impacts cash management, and the responses he saw in the region, given his regional position. Suhas, over to you. Thank you.
Thank you, Fabian, and thank you for the kind words. Since we are short of time, can we move to slide 1, please? No, the previous one. Yeah, initially I had planned to cover a number of areas, but since we have an audience that is practitioners, a group of practitioners that knows most of these things, I will skip right on and move on to slide 6, if we may, and talk about one basic thing that we have, just to keep in mind that there are specific commitments and there are continuing commitments. And what we are focusing today is on long-term commitments, which are basically continuing commitments. And we have heard a lot about many of the preconditions that need to exist. Can we move to slide 10, please? Right. So we will focus today on multi-year commitments. Now, as we know, and as you all know from your practical experience, multi-year commitments impose additional responsibilities on all the players all the stakeholders in the process. And basically, we should be talking about incurring them only after obtaining the formal approval of the Ministry of Finance. And there is a reason for that. That is that although we are looking at cash management and commitment control as two separate things, but they are interlinked. They are intimately interlinked, and one cannot function without the other. Spending unit agencies, therefore, should be required to submit to the Ministry of Finance full details of all the multi-year contracts, including the anticipated commitments and payments for each year, with their likely timing. So what is important, it must not just the quantum, but the timing, both of them together. As you will see, I mean, we are talking of fundamentals, so you won't see many beautiful graphs or charts here in my presentation, but I'm sure you'll bear with this. But I'll talk about the experiences from some of the countries. And can we move to slide 11? And we heard yesterday about many issues that impact on this. A few important steps are the annual budget formulation stage. Now, if the budget is not well formulated, budget is not good, you will continue to have problems. So, and these are issues that we saw yesterday in, say, Delphine's presentation. If you remember slide 4, he talked about project appraisal, selection, and budgeting. And budgeting is a very important aspect of this. So, and we need to strengthen implementation on time and within the budget. And the Ministry of Finance needs to provide, make medium-term appropriations to finance long-term projects. So the Ministry of Finance needs to have a full provision for annual commitments, not token provision. And this is an example I would like to highlight in a small country, a small island country. But the problem was that the Ministry of Finance did not control or did not adequately inform the line ministries on what capital projects should be and the number of capital projects and the amounts available. Now, on theory, this looks a very complicated process, but as I will mention, this is pretty simple to understand on a broad term, of course. So what the ministry was doing was they were asking line ministries to seek projects or capital project approvals, and line ministries took it as an indication that they could ask for whatever they liked, and they would, each line ministry would ask for 18, 20, 25 projects to be approved. And of course, there was no funding for this because, as we all know, a large portion of the ministry's budget, which is what I will refer to as fiscal space for the line ministry, is already committed. For instance, in ministries of health, in most countries, 80% of the budget is taken up by salaries and allowances of doctors and nurses. In Ministry of Education, 60 to 65% just goes like that. On top, then you have other expenditures, you have to maintenance expenditures, office expenditures, etc. So the amount that you have available for capital projects is actually pretty limited. So that needs to be kept in mind. Now, in this country, they were asking for everything under the sun. So, and the Ministry of Finance was politically constrained in the sense that the Minister of the Finance didn't want to upset his other ministerial colleagues. So he would make a provision for every project that was asked for. And I'm not giving a figure out of my head. I mean, this is an actual example. Provisions were made for $100 for a multi-million-dollar, multi-year project. The budget provision was $100. Now, obviously, you can't do much with it. In fact, that $100 is actually wasted because you can't use it anywhere either. So, Ministry of Finance needs to make full provisions, not token provisions, and include them in the quarterly and cash plans. And we heard, and that's why I said that cash planning is intimately linked to this, because the line ministry makes the cash plan, which informs the Ministry of Finance of how much requirement is needed, and also the debt management people in case debt financing is required. So it's an intimately linked process. And as we heard from Cambodia, we are doing something like that there. Now, during the budget implementation phase, it is also important to keep in touch with the line ministries. And project managers must keep the project under constant review. It's not as if you have made a provision for once and then the work is done. So report between the budget office and the Treasury any changes, any appropriations, any changes in plans. What it means is that monitoring is important. And we can talk about legal provisions, but it's a touching belief that if you have a law, people will follow the law. If you have a rule, people will follow the rule, but it never happens like that. What is important is not just to have a provision or a legal provision or a rule or a law, but to make sure that you are enforcing it. And enforcement becomes a different issue. So, and we all know as good bureaucrats, I was one too, that bureaucrats are not really geared towards enforcing all rules if they don't want to. So projects get delayed. I've never in my life yet seen a capital project, construction project being done on time. So projects get delayed, disputes will happen. So the cash plans need to be constantly updated so that, especially for the future, or as I said, what is important is not just the timing, but also the quantum. So especially in multi-year projects, the timing and quantum are very important to be reviewed constantly, not just by the line ministry, but also by the Ministry of Finance. The actual details of when an expenditure will occur will rest with the line ministry, but the Ministry of Finance can also, with an application of mind, understand clearly what is happening and what is not likely to happen and make adjustments. So what we are looking at is how do we capture these annual commitments? Do we use an FMIS system? Do we do it separately? Do we have a separate system? In countries, sometimes FMIS systems are well developed, they could capture this. But again, the question comes on estimation of the timing and the quantum, and that has to be input into the system correctly. The system is not going to update itself. So a lot of the responsibility rests on the line ministry and on the Ministry of Finance to review what is happening. And that brings us to the issue of linking procurement plans to cash needs. And that in turn needs to get linked to the debt issuance issues. Can we move to slide 16, please? So both of them need to be proactive. Ministry of Finance cannot abdicate responsibility by saying the land ministry didn't tell me what is happening. And the land ministry cannot abdicate its own responsibility by saying I told the finance ministry, but nothing happened. So as we heard from some other presentations, what we need is rigorous costing and to avoid underfunding both for initial work and for maintenance. That is also an issue that has to be dealt separately. So information systems are very important to enable the line ministries and the Ministry of Finance to understand clearly what the requirements are over a period of time, or what their quantum will be over a period of time. So, which brings us to the next issue of, which is our, as a practitioner, it is always our bugbear, political commitment. As I gave you that example, the finance minister would approve $100. If the commitment is not there at the finance minister's level to keep to a good system, to ensure that a good system is there, there's very little you can do. And as a separate example, also the Ministry of Finance also needs to make sure that the ministries understand what is the fiscal space, the elbow room they have. And that's not so difficult to do, again, because if a ministry is getting, for instance, $100 million in its budget every year in year one, next year it gets $102 million, the third year it gets $98 million, the fourth year it gets $104 million. What exactly is it? What exactly is it likely to get in year 5? It's not going to get $200 million. It's going to be somewhere in that space, $100 to $105 million. So it's a lot of line ministries come up with the excuse that we don't know what the total budget would be. We don't know what the final budget would be. Therefore, we cannot plan. But that is not correct, because you have a very good idea what the actual budget will be, because it's not going to deviate 100% from what you got in the last 5 years. It's going to deviate 4 to 5%. That's about the best you will be getting. And you already know what your expenditures are, your commitments are in terms of salaries, allowances, other expenditures, office expenditures. So now you have a fairly good idea of what, and also you know what your ongoing capital commitments are, what your long-term projects are, and how much is the requirement for them. So if you total all that, you have a fairly good idea of what fiscal space you have available in which you can plan further new projects. So that gives you a good idea of what you plan for the future, and it all depends on how well you are able to project the timing and the quantum of the funds that you require. So it's very important for future commitments to keep this fiscal space in mind. It's also very important to link this clearly, the requirements or commitments in future to the cash management issues, to the cash requirements. So that's all I would say. I think we can answer further questions on the chat box. Thank you very much. I hope I kept to time.
Thank you very much, George. Indeed, thank you for your flexibility and also for your candidness. And so, as you rightly mentioned, many of the problems in cash management actually come from budgeting and from the information asymmetry and the mistrust between the Ministry of Finance and the line agencies, right? So the line agencies bloat their predictions, knowing that they'll get cuts, and the Ministry of Finance is actually allocating sometimes much less than what is available. Yes. So how to get out of this circle. So it's great. I'm very happy that we'll also have a speaker from the Korean Budget Department later in this session who can address that. But without further ado, let me invite Mr. Mr. Mosh Abdul Kabir, Vice Director of the Cash Management at the Indonesian Ministry of Finance. And since this year's PEMNA plenaries, we focused on capital investments, as countries prepare the post-COVID stimulus plans, which really is driven by investments. So Mr. Kabir will tell us about Indonesia's ambitious investment plans and how it has strengthened the governance of these investments. So over to you. Thank you.
Thank you, Fabian, and good day, everyone. I would like to present regarding the government investment and the financing and government governance in Indonesia.
So maybe just before you start, may I ask Mrs. Hussein if she can kindly take a look at the chat box and give us more information in private? Thank you.
Thank you, Fabian. I would like to good day, everyone, and I would like to present regarding the government investment, the financing and governance in Indonesia. To the next. I would. I want to click the next, but.
Or else, can the secretary share the slides if we have issues? Or I can also share it if you want.
Wait. What should I click for the next? Wait.
If you're having trouble, we will help you out. Please wait a sec until we prepare the PowerPoint. Thank you.
So the secretary will do that. So maybe you can start speaking and we'll have the slides coming in a second. Thank you.
Okay, can you share right now?
Please go ahead, Mr. Kabir. You can start talking about the background you have on the first slide.
Okay.
Yes.
Thank you very much. There are at least 5 reasons why the government is the investment. The first is because the investment is as a stimulus for economic growth, which is Indonesia's GDP depends on the consumption. And also in the long term that we hope that the contribution or the role of investment will increase. And the second reason is because the high need for investment for contractions. That is the good governance and ecosystem for government investment is required. Also, it is estimated that amount needed for investment is about 1,300 trillion from 2021 to year 2024. The third reason is because government funds are widely spread across various government units and into state-owned enterprises. And the assets for state-owned enterprises are relatively high, but not yet liquid to encourage increase of investment. So there is still potential leverage from assets. And the investment also as a catalyst to make the state and state-owned enterprise asset more liquid. So relatively large resources have not been placed on financial instruments that can encourage national infrastructure development. And the last is because the functions and roles of the Ministry of Finance as Treasury is increasing and strengthening through a well-executed pattern of government investment governance. So I would like to present regarding the policy that the structural reform is directed to produce investment and export-based growth engines. As we can see here, that the component of investment it is in 2016, 2019 is about 5.5% the growth of expenditures components, but decreased dramatically in 2020 due to the COVID-19. And we project in 2020, if a business as usual without reform is about 5.7%, but if through the reform, it is 7.0%. And it is projected increased from 2020 to 2023 until 29, 24, 25. So it is like steadily increased from 6.9 to 7.1 to 7.5 and 7.8. So in 2023 is our consolidation fiscal. So from this table, the investment and export is a driver of our economic growth. The reformation is structural reform driven by the job creation law and the investment management agency that must be able to open up investment and export opportunities, as well as create quality jobs with high productivity. And also increasing people's income levels by providing decent jobs so that the consumption growth can recover to levels above 5%. If we see the red dots, it's 2023 is the fiscal consolidation point that we would like to back to 3% deficit. So at that point, the growth remains stable due to the increasing role of the private sector in line with the recovery in post-pandemic economic activity. And the role of government support can be reduced without disturbing economic stability. And the policy of post-pandemic, that the structural reform policies is directed to drive investment and increase export competitiveness. So we would like that investment will accelerate economic transformation, increase manufacturer shares, such shown in the yellow one, and also the high value added services as shown in the green one. And we can see the agriculture is decreased drastically in this graph. So investment is directed at developing potential sectors to be able to create quality jobs and produce competitive products both domestically and internationally. So it's export-led growth, like downstreaming of natural resources to commodities like food, beverage industries, and base metal, and also medium high technology or industrial development such as automotive and spare parts, and also chemistry and pharmacy, metal and electronics, and etc. And for modern and export-oriented search development is for tourism and IT-based products or software. So these policies is to support for increasing export of domestic superior products. So I would like to the next how the realization of our investment from 2016 to 2021. So in the last 5 years, the lowest total realization of government investment is occurred in 2019, and the highest investment is occurred in 2020. And the portion of investment to state-owned enterprise is fluctuated in the range of 5.9% to 56.7% of the total investment. And regarding the realization and projection in 2021, right now, the total investment realization up to July 31, 2020 is about 26.3% of budget or 23% from outlook. It sounds that it is not big enough because usually they just delay their projection from their realization from the projection. And actually, why it is not easy, because we actually control them, how to make realization that each disbursement of investment to state-owned enterprise is must be accompanied by the urgency of disbursement as well as the key performance indicators and performance contracts that are monitored and signed by management to achieve the investment return target. So it's not easy. And then the second is investment to state-owned enterprise is stipulated by government regulation that it must be signed. Next, from here, we can see that a government investment in the last 5 years has been dominated by investment in state-owned enterprise and public service agencies, or BLEs. And the highest investment in state-owned enterprises occurred in 2016 and 50.52 trillion, or 66.7%, and the loss is in 2018 about 5.6%. And also there was a significant return on investment in 2020 amounting to 21.97 trillion related to the national strategic project transaction from state asset management, or element. Next is the jump in investment financing from 2017 to 2020 reaches 124.7 trillion, and in 2022 is projected to become 190.6. So our investment financing policy in 2022 is maintaining the effectiveness of investment financing in the range of 0.30% to 0.95% of GDP. And also the provision of investment to state-owned enterprise is kept selectively by considering the financial condition and operational performance, as well as the readiness of the project to be supported. And the third is support investment financing to accelerate the strengthening of the quality of human resources competitiveness, increase exports, and increase access to financing for MSMEs and low-income people. So that's our investment financing policy in 2022. So the next is I would like to present regarding the scope of government investment, that is Foreign Wealth Fund from Ministry of Finance. It is according to Regulation number 1/2004, Posture of State Budget and Financial Report in Ministry of Finance. So basically, for the government investment consists of permanent and non-permanent investment. For permanent investment is investment in state-owned enterprises. The second is investment to limited company. And the third is investment to other legal entities. And the last is investment into international organization. While the non-permanent investment is based on the Government Regulation number 63/2019, that is consists of a government investment committee that they can invest in shares, debt instruments, directs to loans and investment cooperation, which is in government investment operator, in public service agency. There is a Ministry of Finance and also non-Ministry of Finance. For Ministry of Finance, there is a revolving fund and also endowment fund. The example of revolving fund is Government Investment Center, or PIP, and LPDB, or it is revolving marine revolving fund management agency, and LPM UKP is regarding the marine and fisheries business capital, and then the BPDLH is environmental fund management agencies, and the last is state asset management institution, while the endowment fund is LPDP is for education. And for the non-Minister of Finance, it is the public service agencies regarding the PALM, and also public service agency regarding the IT accessibility agency, and other public service agencies, where the OIP on SOA is none. And for government investment committee operation for other entities are people housing saving management agencies. The next is I would like to regarding the governance of long-term investment. The regulation is on Minister of Finance. He also become a supervision as well as government investment committee. The regulation of Minister of Finance is to formulate provisions and regulations in the government investment sector, and also establishing general policy and strategic plan for government investment, and also is established a government investment policy statement. And besides become a regulation, as a supervision as well, there is a government investment committee that consists of Ministry of Finance, Ministry of Technical, and also government internal auditors and experts or professional. While the government investment operator as operation is consists of public service agencies, state or enterprise, and also other legal entities. So the government investment committee is select which one is become the government investor operator after the government investor operator is applied to become a government investment committee. So both supervision and operation to do the aim for economic benefits, for social benefit, and other benefit, they have to do some steps or stage. The first is the planning, is prepare an annual investment plan based on the strategic plans. Either they do to securities, share, bonds, government, corporate, foreign, or into the direct investment, either loan or investment cooperation. And they have to implement after that to execute by themselves or use investment management. And after the implementation, they have to report regarding the preparation of investment implementation, that reports from GIO, from Government Investment Committee, to Government Investment Operator, to Government Investment Operator. And then the supervision of investment, the implementation of the implementation by GIC and GIO. And the last step is the accountability, or the achievement of the government investment goals.
Mr. Kobir, can you please conclude? We need to wrap up. Thank you.
Yeah, and the last is I would like to tell about the information system that actually there is a SACTI or agency level application system, and also Siemens, that asset management information system, to support all of them. Thank you very much, Fabian. This is my last.
Thank you very much for this very rich presentation, and it's very interesting to see the whole of government approach, all of public sector approach that is being taken, really including SOEs and agencies. And a very ambitious investment plan. I tried to make the the conversion, I think you're looking at $91 billion investment. So that's not small. Thank you for that. Without further ado, let me move over to Korea. Mr. Bon Yong-ko, Deputy Director of the Korean Budget Department, will present how the budget is being prepared and managed to ensure medium-term commitments of public investments. And I think indeed Korea also has this whole of public sector approach, which helps manage commitments and expenditures. Over to you. And with a request, if it's possible, maybe to do the presentation in 10, 12 minutes, that would be great. I think everyone has the slides and has seen the initial slides, so that we have time for discussion. Thank you. Over.
지금 들리나요? Nice to meet you all. My name is Kuo, Deputy Director of Budget Management Team at the Ministry of Economy and Finance in Korea. During this presentation, I'm going to explain the budget system and the total project cost management system of Korea. Content. I'll just briefly cover the size and process of Korea's budget, and I will elaborate the budget management system in detail. First, I start off by explaining the size and structure of Korea's budget. The budget consists of central and local government budgets. The MOF manages the central government budget, which is reviewed and approved by the National Assembly. Korea has a high priority of keeping the balance of power between government and National Assembly. So when it comes to approving and reviewing yearly budget, this makes the budget deliberation process very harsh, and many of the projects get cut by the National Assembly if they find it unnecessary. On the other hand, some of the projects get more funding than expected, as congressmen from certain regions are amended on some of their regional projects. In particular, projects for construction and civil engineering often have owners who are backing up these projects, and the amount rarely gets missed. National budget is composed of general account, special account, and funds. Let's move on. In 2021, Korea's total expenditure is 558 trillion won, equivalent to $480 billion. Ever since 2017, the government has increased its spending from 4 to 10% every year. The government's 2022 budget proposal also posted in 604 trillion won. Now, Korea's budget process. The fiscal year of Korea is from January to December. The budget process starts with the budget formulation and approval a year prior to actual budget year, execution on the actual budget year, and end settlement and evaluation a year after the budget year. I will skip slide 9 and slide 10. Now move on to slide 11. Line ministries submit a budget request by May to the MOF based on midterm financial plan and budgeting guidelines. Based on budget requests submitted by the line ministries, the MOF drafts a government budget and submits it to National Assembly in early September. The National Assembly usually reviews the budget proposal in November and finalizes that budget in early December. Then we spend the budget in fiscal year. The settlements are processed in the next year. The settlement is reviewed by National Assembly also. This is a short brief of Korea's budget system, and now I'm going to talk about the budget management system in Korea. The system that I'm going to explain is designed to prevent overspending of a budget. Line ministries or the people who benefit from the project tend to want more funding. For this reason, we have created a budget management system to maintain proper budget spending. First, preliminary feasibility studies. I'll call this PFS going forward. PFS was first introduced in 1999 as a system to assess the feasibility of each project. If the project costs more than 50 billion won or the government funding goes over 30 billion won, the project must undergo PFS. The PFS is based on economic, policy, and regional development perspective. If the evaluation value, we call it AHP, exceed 0.5 out of 1 point, the project validity is approved. PFS also provides the reasonable range of cost for each project. Now let's talk about the total cost management, TCM. TCM was created to manage project total cost with a duration of more than 2 years. TCM enables the government to more effectively manage each project. In case where only drawing cost is reflected in the first year, you may think it's not much, but from the second year, construction costs are incurred. Then it would be challenging to manage each project expenses. And TCM was introduced in case line ministries or project managers ask for more funding. During the initial period, for instance, people ask for a budget to build a will-build narrow road with least cost, but time goes by, they demand more funding for wider roads due to community complaints. TCM can control this stuff. TCM applies to over 50 billion won in civil engineering IT project and over 30 billion won project in architecture R&D project. All expenses related to the project, construction, design, compensation, cost are also managed under TCM. The budget office manages the project's entire process through TCM. If a business is carried out over a long time, each step undergoes a reasonable budget adjustment. And if the project cost goes over a certain level, from this is about 15% to 20%, we need review on the feasibility. This is very heavy process, so we control the size of the business under 15 or 20%. Each project that undergoes TCM also needs to go through PFS validity process. If AHP over 0.5, then the project gets approved for funding. Based on this, ministries establish a master plan. In the basic drawing stage, one cannot change the cost of a project derived from the master plan without a reasonable reason. Before working drawing process starts, there has to be a discussion of a total project cost with MOF and ministries. Additionally, during the working drawing stage, one cannot change the cost of a project derived from basic drawing without a reasonable reason. Before the construction contract starts, total project cost must be discussed with the MOF as well. This is the last presentation. Based on construction contract, if there is any difference between the estimated price and a winning bid, the difference has to be returned to the government account. During construction, total project cost change is highly limited, except inevitable circumstances like inflation or law revision. This process can help prevent certain projects asking for unnecessary expenses. It also, TCM helps to establish midterm financial plans by financial authorities can see when they need to spend a large amount of money in the future. Thank you very much.
Thank you very much for this excellent presentation and a very timely delivery, Mr. Nyongko. It's always impressive to learn from Korea's very robust vetting processes, and not just upstream during the budget process, but also during project implementation. And with this great rule, and I don't know many countries that have this rule, that you need to go back to the review if your cost increased by 15 to 20%. Or even more rare, but very relevant, if the demand decreases by 30%, because indeed conditions can change. Maybe just one question I would have there is, how did you deal with COVID to avoid so many reviews? Because I'm sure that the demand on infrastructure projects, transport projects, has suddenly decreased, but due to a very exceptional external shock. So is that also part of this review process in TCM, or has there been a waiver in that case? But let's maybe also collect some more questions from the colleagues. So we have now 15 minutes for Q&A. There has already been quite some discussion in the chat box. And I'd like to maybe highlight two questions from Thailand, from Thailand and Cambodia, unless they want to come in themselves and ask the questions. Thailand, do you want to come in and ask your question to Mike? So we're not the only ones talking.
I'm so sorry. I'm just private chatting with Mr. Mike on the cash buffer, and it just the question that I quite wondering about the related factor that should be identifying the size of the cash buffer, because in Thailand we don't really have a formal policy on the cash buffer, but we do have some kind of like amount that we reserve for our reserve to be not lower than this amount, some kind of that. So I'm just quite wondering what should be the main factor we need to consider whether it's relevant to forecast the cash buffer for Thailand. Thank you very much.
Thank you very much. And you raised another very good point, which is, I guess, also of interest to other members of the TCOP, which is about the legal constraint on borrowing. So that's also a very relevant question.
Yes, yeah, because in Thailand, we do have an act on disciplines, on the fiscal disciplines, and they do have a legal constraint on amount of debt and amount of funding or financing that we cannot go over in each year. So it's quite a bit of interesting whether we can like amend this in the in case of this kind of crisis, something like that.
No, thank you. That's very relevant, because indeed there has been many instances where classical fiscal rules have been suspended during COVID. But I'll turn it over to Mike. And in the meantime,
yes,
I invite Mr. Kobir, just to invite Mr. Kobir to maybe have a look at Cambodia's question and prepare his response thereafter. Thank you. Over to you, Matt.
Thanks very much, Fabian. And it's a very good question and a very difficult question in many ways. I mean, on the calculation of the cash buffer, I mean, it's not a simple calculation, and it's one that requires a lot of judgment. We tend to focus on two drivers. Firstly, to manage the day-to-day transactions, and then the buffer you need to do that will depend on the volatility, the ability to forecast that volatility and your cash profile, your ability to respond to the forecasts, I mean your cash flow smoothing instruments, and then how quickly you can respond to any divergence from the forecast, which is usually how quickly can you issue additional Treasury bills, for example, if you need to. And then you may have safety nets available, commercial bank credit lines, borrowing from the central bank, and so on. Then also, as well as this transactions buffer, you may need a safety buffer, a precautionary buffer to cope with market disruption. You know, one example, Hungary allow for their domestic financial market to be closed for 6 weeks, for example, so they wouldn't be able to auction. Several countries have a buffer that allows for a failed auction, bond auction, for whatever reason. And you have to put all these factors together and then come to a judgment. And there is some material. The IMF have recently published one of their how-to notes on developing the cash buffer, and it's something that I've written about as well. The legal constraint, of course, this is very different in different countries, but as you said, it can look like overfunding. Whether that actually needs a change in legislation, or whether it needs discussion, for example, with your Supreme Audit institution, because you're not overfunding to spend more money, you're overfunding to protect the effective execution of the budget. And in net terms, nothing's happening because you've got a cash asset that you can offset against your debt. And I think there is often some mileage for discussing with the auditors your ability to do this within the existing law. Although, of course, it will depend on exactly how the law is drafted in the particular country.
Okay, thank you very much. And that's maybe something I would be happy maybe to have a further conversation on that, to see if there's maybe a need to review and revise the Fiscal Responsibility Act and rules, because usually you want to build in provisions for these type of external shocks, not just distinguishing between in-year and out-year, but also if the rules are too rigid, they're meant to be broken, and that's not very good. So that's maybe a further conversation. But there was also a great question from Cambodia on asset management, and indeed, that's very relevant. It's what information system for asset management after the completion of the investments, and how to allocate recurrent expenditures to these capital expenses. So also maybe a question, so it was addressed to Indonesia, but would it maybe also be interesting to hear from Korea on that, if he agrees, and also if the total cost management also includes the recurrent cost of the capital investment. Thank you. So Indonesia, you want to come in, or Mr. Kobia?
Okay, I would like to answer regarding the information system, the government asset management. It's actually the application that we use to support the process of government owned by the government, about the asset of government, it's consists of from the planning and the use of the asset, and also how the administrate, and also how to delete it, and also how to move from other entities to another entities. And it is on internet, we can access on internet. So by using this, is integrated all the government asset, and also from the unit spending, and can be accessed by all of us. And also, so it is as integrated system in Indonesia. So the feature on this asset management system is the master asset. This is basis data on national asset on the management of asset of government. And also on that, we can see the portfolio of the asset to see the activity and evaluation of the performance of the asset of government, and also the inventarization to support the process of implementation of the activity on asset of government. So it is very integrated, and also over there we can plan about the asset that can help to create the planning of the needs of asset of government, and also the management, how it is to help how to create and how to propose and about the government asset management. And the last is about the supervision. It's help to monitor about the activities of the supervision and controlling all of asset government management. And regarding how to differentiate between capital and also the expense, basically, if the expense for asset is to increase the capacity of assets, is come into capital. But if the expense is for routine and also for daily basis, it's for routine expense. It's my answer. Thank you.
Thank you very much for your answer. Maybe there's also, so I don't know if Korea can share their experience on that as well. I know that
Yes,
the Philippines are also working on an asset registry and asset management on that. Maybe you can hear from that later.
그런 시스템이 있긴 한가?
어떤 시스템?
예산 매니지먼트 시스템,
시스템이
자산 관리 시스템이 있긴 한가? 그게
국보국에서 하는 거. 우리가 사실 예산 쪽에서 하는 건.
Okay. Actually, we have asset management system in existence, but when it comes to TCM, we don't include the maintenance cost in the review process of TCM.
Thank you. Then regarding the cash buffer, I think we also saw from a number of countries that they used the cash buffers of their SOEs. So we saw that in the Philippines and Malaysia. I think many treasurers do that, which is good when you have SOEs which are flushed with cash. It's less. It can be a problem if SOEs have a lot of liabilities themselves, as you do not want to create additional liabilities and fiscal risks. But that's also, I mean, the benefit of having a whole of public sector approach. There was a good question also from Vietnam about the economic impact, medium-term economic impact of COVID, and to what extent that affects cash forecasting and cash planning. Would be great, and Mike has started responding in the chat to that. Maybe what would be useful to know also is, Mike, you mentioned Turkey and the scenarios, so the stress test of your cash production. So to what extent countries do take into account the downturn, and not just in terms of tax revenues, but again, SOEs, that's where it can be tricky as well, because you do have a delayed impact, right? SOEs in the commercial sectors have been hit hard on the revenue side, also on the expenditure side. They were part of the emergency COVID responses. Obviously, this will affect the dividends they can pay out next year, and also their cash needs. Mike, you want to complement that?
Oh, I mean, no, I mean, you're very right. And of course, there are SOEs in very different positions. And even where there are cash risk SOEs, by borrowing from them, you're cutting across their own commercial operations, which could have damaging impacts downstream. And it's also unhealthy from the point of view of future market development. Some countries, I have in mind Colombia, relied very heavily in past years on their SOEs, but they effectively took their financing off the market, which of course damaged the development of the local financial market. So there are these wider implications that you have to take into account. I think I would also mention, as well as SOEs, of course, there are a number of countries that have substantial extra budgetary funds that are not always brought within the boundary of the Treasury single account. Arguably they should be, but social funds and road funds and health funds maybe, who may have temporary surplus cash, and borrowing from them in the short term until they need that cash is likely often to be less damaging than borrowing from the SOEs. So don't as a short term, and it has to be short term, of course, source of funds. Don't forget extra budgetary funds who are outside the Treasury single account, as well as the SOEs.
No, absolutely. Thanks a lot. And I think the Greek euro crisis was a good example of how extreme it can get. And let's learn from all these crises. But so let us move on to the second session and the next crisis, unfortunately, the climate crisis, which looms big and really will impact public finances. But there's certainly lots of lessons that can be drawn from this crisis and how the Ministry of Finance and Treasury has responded. So it would be interesting to see how these risks are being managed, and we'll have two great presentations today from two countries which are particularly vulnerable and exposed to climate risks and increasing extreme weather events, the Philippines and Vietnam, and trying to learn from their experience how they're really proactively trying to assess these risks, manage these risks, and finance these risks or share these risks with insurance schemes. So without further ado, let me hand it over to Mr. Eduardo Marino, a Deputy Treasurer of the Philippines and veteran of PEMNA, who will present the Philippines' efforts to improve disaster risk management through insurance and a more proactive asset management. We may actually need another follow-up session on that, on the assets, because that's indeed a very topical question. And then we'll have a presentation from Ms. Luan Nguyen, researcher at the National Institute of Finance of Vietnam, who has worked a lot on disaster risk financing and sustainable finance policies. And I like really this term, the sustainable finance policies, because as we saw yesterday in the session on climate, finance policies have an impact on climate and are impacted by climate and climate risks. So it would be great to also hear from the Vietnam experience. Without further ado, Eduardo, the floor is yours. Thank you.
Hello. Hello, good morning, good afternoon, good evening. In behalf of the Deputy Treasurer Marino, who has an emergency meeting, I will be presenting for the Bureau of the Treasury on the disaster risk financing insurance strategy.
Great, thank you. Can you please speak up? We can barely hear you. I don't know if it's on my end, but
Am I properly heard now? Is my voice okay now?
a bit better, but still a bit mute.
I think it's because of the mask. So anyway, we all know that the Philippines is located along the Pacific Ring of Fire, and it has been exposed to a wide range of natural hazards. Just last year, before the Philippines or the country went into lockdown in March, we experienced in early January to February the eruption of that Taal volcano. So we just like to show to you that the Philippines has been experiencing a lot of earthquake and typhoons lately. Some of them are really very strong. So this just shows you, this slide just shows you the losses, both on the well-being, socio-economic, and asset losses of the country. Also on the next slide, you can see the areas which are prone both to typhoon and earthquake. So the red colored shade, or the red shaded provinces are the most recently experiencing earthquakes and typhoons. So you can see that most of the typhoon tracks are on the eastern seaboard of the country. The next slide also shows you the losses. You can also notice here that in 2013, we have a very high loss. So this is the time that we experienced Typhoon Yolanda, or with an international name of Haiyan, which is a Category 5 typhoon, and which killed 6,200 people and left 1,700 missing, which are now presumed to be also dead. And the country also experienced 571.1 billion losses. So the Typhoon Yolanda was a very strong typhoon that hit the country after several years. So we, as a basis for the adoption of the disaster risk financing, we have the National Disaster Risk Reduction Management Plan, which provides authority for the Department of Finance, of which the Bureau of the Treasury is under the DOF, to take the lead in ensuring communities to have applicable disaster risk financing. And we also would like to take note of the disaster risk management development policy loan. So we have adopted strategic policy goals, both on the national level, on the local government level, and on the individual level. But to achieve this, you have to take note that there is this importance of disaster risk data. That is why this strategic policy goals is to be connected to the use of the data. So just a while ago, there was a mention the asset registry. So under the Bureau of the Treasury, we are now developing the National Asset Registry System, which is basically an inventory of the national government assets. So the information included here are the value of the asset, the location of the asset, as well as some risk factors of the asset. We also take into account the National Disaster Risk Reduction Management Council reports. So these are basically reports that are made to provide loss reports, the loss reports if and when an event happens. So we correlate them. And there is also the developed GeoRisk PH, which is a system by the Department of Science and Technology. So again, you have here the assets are mapped, and then it takes into consideration the location, the risk profile of the location. And we also take note of the air catastrophe model for the simulation of the losses and the weather tracks by, again, DOST. So this is just a sample of the tracks. The small icon houses are the supposedly assets. So when a typhoon takes this path, you can see that these are the vulnerable communities that will be affected by the typhoon. So this is taken into consideration in computing or taking into account the possible losses that may be incurred if and when this part of the country is destroyed by that typhoon. So we tried to do the risk layering. So we've divided because not all of the funds previously to the country didn't have that disaster risk financing. So what happens is the budget of the government is depleted and we don't have a post-disaster fund. So what happens is we just rebuild, reconstruct after the event. So now with risk layering, we are adopting these. Either you have to retain, you have the retention or the transfer. So when we, on the retention side, what we do is that we have disaster funds and contingent financing. So this is to be charged to the funds of the government. So this is under the budget, the yearly budget. And this is for highly frequent but low severity occurrences. Now for low frequency, like the Typhoon Yolanda, low frequency but high severity, it's we adopted that we have to transfer it either through the adoption of parametric insurance or indemnity insurance, and also catastrophe ban. So usually the losses incurred in this part of the area that we have to transfer are very big, that the fiscal position of the government will be challenged if ever we charge is to the budget of the government. So this is what I have been explaining in the previous slide. We have the disaster fund, which is there are two kinds. We have the National Disaster Risk Reduction Fund under the national government, and we also have the Local Disaster Risk Reduction Fund. So the Local Disaster Risk Reduction Fund is under the budget of the local government itself. So the purpose of this fund is either to rehabilitate, reconstruct, and for recovery and relief purposes. So again, as I've mentioned, the source of these funds is the national budget. So every year we apportion a certain part of our budget for this fund, for the disaster funds. Now, what are the limitations of this? We have, well, of course, if it's charged to the budget, there's also a limited budget. And if all of the LGUs or some of the agencies are affected, you have to prioritize because you have limited budget for these funds. Now, in 2018, we adopted the parametric insurance. Now, this is for the local government. So, if you relate it to my previous slide, you can see that on this eastern seaboard, this is usually the path of the typhoon. So most of the provinces here are damaged by typhoon. That is why we identified them as the 25 priority provinces along the eastern seaboard. And we made, in coordination with the World Bank, the parametric insurance was launched. So there are several triggers. Once the trigger is met and the assessment is done, payout is given to the LG or to the local government unit. So the payout may be more or less than the actual losses of the local government. So this is on the payout side, there is no need to provide the actual losses. You just have to look at the trigger. Once the trigger is met and all other requirements is met, and then the funds is already provided to the Republic. We also launched the Catastrophe Ban. So the coverage for 3 years, again, for the perils of typhoon and earthquake. And the source of funding is from the excess income of the Bureau. It is supposed to be a payout to be used for budget support. And it's a bond issuance to secure payout payment, and it taps investors of insurance-linked securities. So it's a 3-year bond issued by the World Bank with the government of the Philippines as the sponsor. The next instrument is the Indemnity Insurance, which is currently under preparation. So the difference from the parametric insurance is that the indemnity insurance is based on the actual losses. So what we prioritize are schools, roads and bridges. We use the data from the National Asset Registry, basically the location, the construction. We use the data to compute for the replacement cost of the schools. And then again, taking into consideration the priority areas. So not the whole Philippines, we just choose the priority areas to be covered by the indemnity. And it's the purpose of this is for reconstruction. So if and when the perils, typhoon, earthquake, storm surge, or volcanic eruption happens, and the property is damaged, the DepEd will have, Department of Education rather, will have to submit the documentary requirements, and the payout will be based on the actual losses. So basically, that's the difference between a parametric insurance and an indemnity insurance. So this one, your actual loss will be recovered, but on the parametric, there is a chance that the payout may be less than the actual or more than the actual losses. So basically, there are a lot of programs that are being adopted by the Philippines, and we're trying to find out which of these instruments is best to be adopted. So some of these instruments may be best adopted by us, but it may not be applicable to other countries. So there is really a need to study which financing instrument would be most applicable to each country. Thank you.
Thank you very much for this excellent presentation, very visual and really showing the different responses and also the underlying challenges from a public finance management perspective, as you rightly said. And we see also the questions coming in from Cambodia on that, which we'll discuss in the Q&A. It's important really to have good, current and precise information about your assets to be able to really one, stress test them and trying to see to what extent which assets, critical assets, are exposed to risks, climate change risks, extreme weather events, what's their value, and then also being able to estimate the losses and the cover thereof. So that's indeed a great reform, but we'll come back to that in the chat. Let me maybe now hand it over to Vietnam to hear from Vietnam, which also has a lot of experience in disaster risk management, disaster risk financing, and is working now on mainstreaming disaster risk assessments in its public investments and assets. So over to you, Vietnam. Thank you. We can see the slides, but we cannot hear you. And in the meantime, may I also draw the members' attention to Malaysia's response to the earlier question regarding commitment adjustments for cash management purposes. It's in the chat box. Thank you. Thank you, Malaysia, for your response. So Ms. Nguyen, we can still not hear you. Or is the audio stream coming from you now?
No, she will speak in English.
Okay, thank you, ma'am.
Oh.
And maybe if we can have slideshow, then
Yeah,
it
yeah,
would be
sure.
easier. Great, fantastic.
Can
Thank
you
you.
hear me? Yes, very sorry for this problem. By the way, I will start my presentation now. So today I would like to provide some information about the financial instrument reducing impacts of climate-related disaster risks on public assets in Vietnam. So Vietnam is identified as one of the countries likely to be most affected by climate change and weather-related natural disaster. It is estimated that about 60% of the total land area and 71% of the population are at risk of storms and floods. Vietnam is faced significant social and economic impacts across multiple regions and sectors. According to the estimation of our Vietnam facing a loss around 1 to 1.5% of GDP annually because of natural disaster. And this figure is expected to increase in the future due to the impacts of climate change and rising sea levels. It is forecasted that by 2050, the loss could be up to 2% of Vietnam's GDP. And as you can see in the figures, weather-related natural disaster accounting for the majority of loss in Vietnam. And the most common natural disasters are typhoon, storms, and floods that cause the most damage to the property and population in Vietnam. Concerning on the impact of disaster risks on public assets in Vietnam, annually the average assets lost due to natural disaster is estimated at 2.03 billion USD, ranking the 9th among 10 countries to be the most affected by natural disaster in the world. Vietnam is in the top 10 of the countries to be most affected by natural disaster in the period of the 1997 to 2016. Concerning on the loss of public assets, public infrastructure is in the list of assets that suffer the most economic risk. The most economic losses due to disaster risk. By 2100, it is forecasted that 4% of the railway system, 9% of the national highway system, and 12% of the provincial road system will be affected by flood. Roads are the asset class with largest losses, and this is followed by schools, hospital, and railway. So to overcome such impact, we have implementing some financial instruments to reduce impacts. As a part of overall financial disaster risk management policies, financial instruments for disaster risk management of public assets in Vietnam include state budget, disaster risk insurance, fund for natural disaster prevention and control, international assistance, voluntary contribution, and other resources. In such a financial instrument, the main one is state budget. So, however, after 2015, we are trying to develop the disaster risk insurance and fund for natural disaster prevention and control. This is an effort to reduce the burden on the state budget. Concerning on the state budget is the main financial resource to support natural disaster prevention and response. It's deploying in the form of expenditure reserve, tax, and financial reserve fund. Concerning on the expenditure, A part of annual state is used for planning, construction, repair, and renovation of dike and flood and storm prevention works, technical equipment for forecasting and warning, and expenses for disaster management activity. The government also allocates both investment and recurrent expenditures to risk reduction activities. About the reserve, regarding the use of state budget reserve, the budget reserve is in the range of 2 to 4% of the total expenditure at all the levels. However, the natural disaster risk is thus one of the content of such expenditure. Regarding to tax, the group collection policy mainly focuses on tax exemption and reduction policies to reduce tax and fee burdens for those who suffer damage due to the natural disaster. The province and about the financing reserve fund, that is usually gradually each year with the maximum control level is to 35% of the annual estimated expenditure budget. About the disaster risk insurance, actually we are in the very first stage of developing the disaster risk insurance for public assets in Vietnam. Now the public asset is encouraged to buy the disaster risk insurance, but it's not the requirement. So the level of participation of the public asset risk insurance is quite low. Basically, most public asset is by the compulsory fire and pollution insurance, but the participant in the catastrophe insurance is quite low. And the list of public assets is encouraged to purchase catastrophe insurance are buildings and works, infrastructure, and for the other case, it's based on the actual use of assets and the risk of natural disaster in the region. About the Fund for Natural Disaster Prevention and Control, the fund does not include the state budget and does not originate from the state budget. The fund's financial source include compulsory contribution from domestic and foreign economic organizations, as well as individuals in region. From 2021, the fund is established at the central level, but before that, the fund is only established and organized at the local level. Some regulations are also modified in 2031 to enhance the transparency and efficiency of the fund. However, during the operation of this fund, we recognize that the capacity and ability, as well as the knowledge of the local authority affects a lot of the effectiveness and the efficiency of this fund. Basically, to support for such financial adjustment, we implementing the plan for disaster prevention for public assets. We also have the system to collect the disaster risk database for public assets. However, we are facing a lot of the problem in collecting data. It's not easy to estimate the economic loss of the public assets. And there is a change from the passive to active financial adjustment in managing natural disaster risks in Vietnam during the past 5 years. Before that, we mainly using the finance from the state budget. However, now we try to develop the catastrophe insurance for public assets as well as other type assets. Is encouraged to the to encourage to the active preparation for the natural disaster. And so what lesson from the hour is that
all of such financial adjustments still ensure the implementation of spending tasks for disaster recovery during the last period. However, funding from the state budget accounts for the majority and only meets a part of the total annual damage. So, for example, in the cost of reconstruction of public property damage is carrying out through the process of estimating and planning for the next financial years, which possibly takes several years to modify to meet with the actually necessary. So in the circumstance that occurrence of natural disaster increase in aspect of frequency and scale, the state budget will face difficulties and can't meet the requirement, can't meet the actual loss. So now catastrophe insurance is considered as an effective risk transfer to reduce the burden on the state budget, and at the same time, the compensating for financial losses close to the national budget on the basis of paying premiums and being compensated according to the principle of insurance. However, Vietnam still in the first stage of the developing catastrophe insurance, so we are facing a lot of problems, especially is the lack of comprehensive data and information on disaster risk finance to estimate the loss, as well as the necessary required for the catastrophe insurance premium. And we also face we also have to train the thinking and the way the local the authority in financing the loss of disaster risk finance. That is an obstacle in risk financing to mitigating the impact on public finance. So in the next period, the overall goal of disaster risk financing in Vietnam is to strengthening the mechanism to ensure long-term risk financing, reducing the potential impacts on the government budget in the event of disaster risk. There is a need for an innovation supply of climate risk insurance for broad population segment, private household and micro, as well as small and medium enterprise. Public and private stakeholders are encouraged to structure their engagement in developing climate risk insurance. The transformation to active finance instrument in financing natural disaster risks in the developing countries like Vietnam need technical assistance from international organizations such as World Bank and ADB. So we really hope that the increase in global cooperation will help us to deal with the problem of lacking of finance and other things. So that's all of my presentation, and thanks for your attention.
Thank you very much, Mrs. Great, for this excellent and timely presentation. I'm really amazed how this session is on time. It's fantastic. So it leaves us time for discussion. I mean, what we saw from both presentations, Philippines and Vietnam, is that climate change is really impacting increasingly these countries. So we see that with an increased frequency and severity of extreme weather events. Two, that the past response has very much been reactive and budgetary. So it was really the budget coping with the cost of the damage. But as going forward, that's no longer possible, right? Because indeed, the frequency and severity of these events and related damages and losses are increasing so much that you really need to share the burden and share the risks. And so most countries are going towards insurance, starting indeed with the parametric insurance, which is easier because you don't need a specific costing, but it's also limited, right? So you have really a maximum that you can get. So it can help smoothen a bit the risk on public finances, but it it's not useful really to insure specific asset owners and assets. And so most countries are now moving towards indemnity insurance, which is certainly a very good instrument. But this requires, as we saw in the chat, and thank you for your questions, Cambodia, and for initial responses also from the Philippines, Ms. Dias. This requires actually having a good grip on your assets, knowing where your assets are, how much these assets are worth, to what extent these assets are exposed to what type of climate risks. Because the more information asymmetry you have, the higher the risk, and therefore the higher the insurance premium cost. And so and if you try to do that on a large scale for all your critical infrastructure, it will be too costly. And so that's where I think both countries' efforts to move on the asset management reform is commendable. It's not easy. It's always easier to focus on the flow of budget flows, new investments. The stock is very large, is very decentralized. You have many owners, you have legacy issues. Sometimes these assets are valued at book entry 40 years ago, was zero. And so then that's a problem. But it's certainly the good way of going about it. And maybe just to complement a bit the Philippines response. So there's a big reform going on since a couple of years, but which has actually led to a government-wide asset management policy being adopted last year. And now with a new assets registry being put in place, valuation of these assets, focusing initially indeed on pilot sectors. Public works and highways is obviously one important one because that's where all the critical infrastructure lies, but also health and education, because these are the critical public services that the government needs to deliver for its citizens, right? And we saw during this crisis how essential that is. And also capacity building and incentives. And I think that's maybe another point. Maybe we can have a follow-up session on that, but it would be great to hear a bit from the two presenters also on the efforts to build up the asset registry and to build up an integrated and digital asset registry. Because in the past, we saw that many of our asset reporting was more for compliance purposes, so they can be audited. And so this was paper files, which is not useful for climate risk assessment, right? Because you need to have the geo coordinates, the geographical footprint of your assets to be able to overlay different climate risks models, flooding models and others, and estimate the risk and the costs and the losses. And so that's certainly work in progress, but very important work. Let me see what further questions we have in the chat and if there are other reactions. So there are a couple of questions from Cambodia. Do you want to come in, Mr. Sokneo? You had very, very good questions. Why don't you share them with the rest of the group?
Well, good morning from Cambodia. Do you hear me? Actually.
Yes, very well. Thank you.
Right. Well, many thanks for the presentation from the speaker, and I'm keen on the asset management as currently we are doing reform on that, and just want to get more information on how many different neighboring countries do and what can we use as either benchmarking practice or just some sort of idea of what we can do in terms of our own application on that. So if I'm not wrong, I thought many countries do experience on asset management in terms of size of the asset, in terms of the valuation, and in terms of the calculation of that, especially on the record of those assets. I'm not sure whether different countries would experience some sort of incomplete data or incomplete asset registry, and in terms of how to compile those data and also get the accurate figure in terms of if you say you have to report on those balance in your balance sheet, and you need to ensure that it is actually how much percent is it accurate, is it reliable, or you have to either restate that balance in the next reporting period. So my question on mainly on the management technique and the valuation technique, because first of all, it must come up with a plan to manage those assets. I mean, you may have come up with a strategy either on data collection to know what are the assets you hold, and then you compile it into one. And after that, how to determine the value of those assets in your book or in terms of reporting. What I'm saying is in terms of financial reporting, in terms of like if you have a clear report to auditor to do an audit on that and to express opinion on it, some sort of that. So I heard that the speaker from the Philippines, as the country is situated in an area that are exposed to many disasters. So suppose if you are exposed to many disasters, most of assets might be damaged. So the assets are not completely destroyed, but in terms of either partial or minor destroyed, and it come up to the way of estimation of the value of loss and how do you write down the impairment of that. That's my question. I do want to know on that. And I got the information from the Philippine speaker, and just want to know more if you can share on. She did say something of this committee on estimate the loss, and then ask the accountant or the treasury, we need to consider whether it's reliable or not, and we can use it as a basis for written down the amount of loss, some sort of that. And that's my question on that. And I heard the Vietnamese try to do the catastrophe insurance, and if I'm not wrong, most private company, especially the banking industry, would have it either to cover their asset, and mostly on the non-financial asset. Maybe their PPE, some sort of like their rented premise, some sort of that, and then they're gonna cover that asset. And I'm not sure whether the state, she did mention on, I mean, first of all, you need to prioritize what sort of asset to be covered. And then it come up to the value of cover. Either you want to cover the historical value that you purchased earlier, or the current value, then what is the effective measure to do that. And that's all from me. Thank you. And do you get my point, or do I have to clearly mention that? Thank you.
No, thank you. These are very important points, and you also have written them down. And so before we turn to Vietnam and the Philippines, may I also invite maybe thereafter other members to share their experience, because Indonesia is also working a lot on disaster risk management, disaster financing. Malaysia, Thailand, so I think all countries are impacted by that and are undertaking reform. So it would be great if you could kindly also share your experiences with the group. And on Vietnam, I'm aware also of the great efforts to value the assets. So if you could maybe share a bit on that with the rest of the group, that would be very useful. Thank you.
Hello. Yeah. Concerning on the questions about how we estimate the coverage amount of our vulnerable assets, basically now we are financing the most of loss in the public assets by the budget expenditure. So in the balance, the loss due to the natural disaster is still sold by the net book value. However, in beside that, we also have an estimation for the current value, and we have a special technique to show such a increase in the current value, and it's also a problem in ours if we want to implementing the insurance, because if we want to implementing the insurance policy, it's required that the financing for the losses paid by the insurance companies should be basing on the actual losses. So, however, in the accounting, the actual loss does show by the net book value, and it's not easy to evaluate and to assessment the public assets, because actually most of public assets is the road, the building, and it also depends on the value of the real estate. So we have a problem in the assessment the public assets, and we also have a different way to accounting to the loss of public asset is managed by the government authority, and the public asset is managed by the state-owned government. So yeah, that's all my say.
Thank you, Ms. Diaz. Do you want to come in? Oh, sorry.
Yes. So basically, for the Philippines, on the estimation of the losses, it's a post-event estimation. So usually, the agency, or the department, has the value of the properties. For example, the DepEd, they take into account the accounting value, which is the value taking into consideration the depreciation, the improvements made on the property. So they have this certain computation, and then they do assessments. They can do visual assessments. They say after a typhoon, a certain place is damaged. So if there is a school there, they go there for assessment, and then they see if it's fully damaged or partially damaged. So they do computations. If it's fully damaged, then it's for reconstruction, and it's for partially damaged, it's just for some rehab. And then they provide this report to our National Disaster Risk Reduction Management, and NDRRM do the final report for the total losses after the event. So this is where we see the value of the national asset of building an asset registry, because one of the purpose of the asset registry is that pre-event you could somehow estimate the losses, possible losses, because you know the path of the typhoon, you know where it will do its havoc, and you know how many assets are within that area, and you have the value. However, the value that is provided to the asset registry is the book value. So, but somehow you can estimate based on that valuation. You have that pre-event estimate of the losses. And since the National Asset Registry is in its early years, the project just commenced in 2018. So we are also improving. We adapted basically from an Excel sheet. We started from an Excel sheet, so all agencies pilot agencies were provided with the Excel sheet where they have to put the asset name, the value of the asset based on what they have, which is basically book value, the location of the asset, and the technical description of the asset. So from this Excel sheet, we are now trying to upgrade to a somehow web-based portal, and we are also trying to upgrade if we can improve the valuation system, if we can incorporate a valuation system based on the information that is given by the agency. So it's really in its early years, but we can envision that the asset registry has a lot of potential, and it can be really useful when we do disaster risk valuation or estimation and risk financing. Thank you.
Well, thank you very much. Let me just second that, because indeed, while valuation can be difficult, it's very useful for three reasons. So disaster risk management and financing, as we just discussed, but also for transparency, as many countries are moving towards accrual accounting. So valuing your assets is one of the main challenge, and that's also oftentimes in the remit of the Treasury. And then, as Mr. Bromby and a speaker from Indonesia mentioned, we need to better leverage these assets. So taking a more of a balance sheet approach to public finances, as we're talking about financing the post-COVID recovery, the 91 billion plan in Indonesia. So for that, you really need your assets to value these assets. So hopefully these three reforms really come together to trying to get a better grip and knowledge of your assets. Because traditionally, we tend to focus on our liabilities. We want to know our debt, our liabilities, not our assets. So that's great. There's just one point also is, so I've been discussing a lot about the physical risks of climate change, the natural disaster. We haven't discussed much and not really considered much yet the transition risks. And that's also very important for the valuation, because if you value your asset now, or the value of your hydropower plant will be very different from the future value of your coal plant, right, with the climate transition. And that's something we haven't really taken into account, I'm afraid. So that's maybe something to look into as well. And maybe related to that, there's also the question of eligibility, and that's maybe a question to both speakers. To what extent are SOEs covered? So assets of SOEs, are they also entitled to the same disaster risk financing and insurance schemes that you have, or is it more for government agencies? Because then there's also the question of responsibility, as I haven't seen many SOEs really factoring in this disaster risk or assessment in their own assets, in their own balance sheets. And so it's a bit easy to rely on the Ministry of Finance and the state whenever a disaster strikes, if you don't have any proactive assessment of this risk and management of these risks. A question of coverage, to what extent they're being covered. And then it would be useful to hear a bit from the other countries also, Indonesia's experience, Malaysia's experience, Thailand's experience in this respect. Thank you. So Vietnam, do you want to come in? Are SOEs covered in your insurance schemes in the Philippines, while Indonesia and Malaysia prepare their interventions? I think you're muted.
Sorry. So yeah. For the problems of Vietnam. So as I mentioned before, we it's not easy to transform from the passive financing natural disaster and climate related disaster. So to the active, the financing by the encouraging the catastrophe insurance. And yeah, as you just say that it's very difficult to evaluate the real loss assets, and also there is differences between the estimation in the loss basing on the book value with the actual loss in the future. So yeah, I agree that the insurance, the catastrophe insurance with the policy of insurance will be better, and will be provide more effectiveness in the financing the real, the actual loss, especially in the case of Vietnam. We estimated that the loss in the future is exceeds the ability of the budget finance to financing it, furthermore, in the process of implementing the transfer from the budget assets, I mean, in the process of transferring to the insurance catastrophe insurance, we are facing the problem of not only the data to evaluate the real assets, to the estimate the loss, and we also facing with the problem that which finance source will be used for the public government to buy the insurance policy. And now the catastrophe insurance does encourage and is implemented voluntarily by the local government. So the rate of the participant is quite low because they can't allocate the budget to have the fee to pay the fee of insurance policy from the perspective of the insurance companies. They are not to commitment with these policies because the fee is much lower than their than their estimation for the loss in the future. So yeah, we are in the case of Vietnam, we are researching and reviewing the to provide more support policy to try to increase the level of participating in the to the catastrophe of public assets. Yeah. Furthermore, we also try to implementing the catastrophe insurance for the other type of assets in the economy, such as the private assets. However, it's not easy to train the approach of the stakeholders to willing to pay the fee to buy the natural the insurance for the natural disaster risk, because the other condition for the successful of the catastrophe insurance is that the development of the insurance market. So I think to deal with all of such problem and obstacle, it requires a lot of the solution, the comprehensive solution to deal with such problem. So yeah, so that's the reason why in the next period we really want to continue to receive the technical assistance from the World Bank to develop the suitable insurance product for the case of Vietnam. And yes, that's all. Thanks for your question. Yeah.
Thank you very much for the excellent comprehensive response. Philippines, do you want to say a word about the SOEs?
Actually, we have a state-owned insurance system, which is the government service insurance system. And there is a law that provides that government agencies, government-owned corporations, government financial institutions are supposed to insure their properties to the government's GSIS. So the accountability of insuring their properties, it rests on the agency or the state-owned entity. And they can insure this, they can apply for indemnity insurance with our state-owned insurance system or the GSIS.
Great. Thank you very much. Does any other member want to come in on that point? Malaysia, Thailand, Indonesia, Laos?
Yes, Mr. Fabian, for Thailand,
Yes.
we do record assets by book value. So if the asset has been destroyed or been affected by the disaster, we will also write off those assets from the registers with the net book value. So, and we have to get the approval from the authority first before we write it off. And that is quite not regarding the insurance policy or anything, we just write it off.
Thank you very much. One question I had also that I came across often is the question of incentives. As oftentimes there's this moral hazard between local governments and central government finances. And so there's maybe not sufficient prevention and resilience investment, because if the disaster strikes, then Treasury will pay. Is that something you came across and you're trying to address? I know that, for instance, if I recall correctly, and Jim may correct me, in Mexico, I think there was a rule that local government cannot ask several times for the damage of an asset. So if it hasn't been built back better, if the local government cannot show that it has reinvested in prevention, improving the situation, they won't get the full insurance, the full refund. And so, and it goes down progressively. I don't know if there's similar concerns and issues also in East Asia. Thank you. Okay, or else we can leave that for a future session. I mean, it's a big topic that we can. Oh, yeah, great. Suhas, please come in.
Korea has a very good system of recording assets. I mean, in Seoul, you can find 13th century temples recorded on an accrual basis. So maybe Korea could give some examples of how they do it, both in terms of recording and in terms of when the asset is destroyed.
That would be great indeed, if they have this information handy.
Always circulate that information later.
Exactly, as we can do that later. And so then, I don't know if anyone else wants to come in on that point, or any other last point before we conclude the session. No? Okay, so let me thank you very much for this very rich discussion. It was really fantastic. And so I think we need to log out from this WebEx connection and re-log in then to the plenary using the link to the BCOP you had. So if I can kindly invite you to log out here and log in the BCOP WebEx so that we can have our closing session. Thank you very much and see you on the other side.
Very much.